Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
The S&P 500 index finished modestly higher last week at 4,300 points, but accumulated a 20% rally since the bear market floor last October, and is now officially in bull market territory. It is 12% higher this year compared to a 27% return for the Nasdaq Composite. The bulk of this bullish trend comes from the solid performance of mega-cap names like Apple, Nvidia, Microsoft, Tesla, and Amazon. The year-to-date return for the equal-weighted version of the S&P 500 is just 2.4%. Stocks in Europe underperformed last week, with the Stoxx 600 index closing 0.5% lower, and is 8% higher in 2023 in euro terms, with the exchange rate almost unchanged. The bond market isn't sending similar bullish signals. The short end of most sovereign yield curves in advanced economies, that is, the yield for two-year bonds, spiked last weekend, and the most curves maintain an inverted shape. The slope of the US Treasury yield curve is negative 85 basis points for the 10-2-year yields. This is near the all-time low. Almost every recession in the US has been preceded by an inverted curve. The yield on 10-year Treasuries is 3.75%, while the 2-year yields 4.60%. In Europe, bonds are trading at 2.38%, and British gilts at 4.24%, marginally higher than a week ago. In currency markets, the dollar index fell slightly for a second straight week, with sterling gaining 1% to 1.2570, and the Aussie dollar was the notable mover, appreciating 2% to 0.67. This brings us to the two monetary policy meetings of the week. The Reserve Bank of Australia surprised analysts with a 25 basis points hike to 4.1%, an 11-year high. The central bank warned of more rate rises ahead in a clear hawkish tone. The surprise triggered buying interest in the Australian dollar. Inflation is running at 6.8%. The Bank of Canada also surprised markets with a 25 basis hike to 4.75%, a 22-year high, and signaled another rate increase for next month. The Canadian dollar appreciated 0.6% to 1.33. In economic data, the weekly US jobless claims update came in at 261,000, the highest since October 2021, and well above estimates, in stark contrast with the robust employment report of a week ago. In the Eurozone, PPI inflation fell for a seventh month, and remains just 1% higher than a year ago. The main driver was the steep drop in energy prices. The Fed and ECB meet next week, and futures are pricing in a 73% chance for the Fed to keep its policy rate unchanged at 5.8%. The ECB is expected to hike by 25 basis points to 4% for its refinancing rate. On Tuesday, we'll get the latest CPI inflation update for the US, and most analysts expect a sharp decline. Last week's highlight in equities was Tesla, with a 14% jump to $244, accumulating a 98% return this year. The catalyst was an agreement with General Motors to use Tesla's supercharger network, which includes roughly 17,000 stations across the US. The deal follows a similar adoption by Ford Motors to use the same standard. The three auto giants account for 60% of the US electric vehicle market. Tesla's market cap is $775 billion and ranks top 6 as the country's largest company, behind Nvidia. In commodity markets, the notable update was OPEC's decision last Sunday to further cut crude oil production, to prop up prices, a move criticized by the Biden administration. Despite the news, Brent fell 1.8% to $74.80, and is 10% lower year to date. The week's biggest mover in commodity markets was European natural gas, with a 35% rally, mostly on warmer than forecasted weather, and a technical rebound after prices had collapsed in recent months. The crypto sector finally got its dose of action. Prices plunged after the Securities and Exchange Commission accused the two largest crypto exchanges of operating illegally in the US. Binance and Coinbase are being accused by the regulator of failing to register as exchanges, brokers, and clearinghouses for their staking services, where investors receive interest in kind. The SEC also determined that several coins, including Solana, Polygon, and Cardano, constitute securities, and hence exchanges require a license to be offered to retail customers. Coinbase shares fell 17% to a market value of $12.5 billion. Bitcoin fell 5% to $25,800, Ethereum 8% to $1,760, while Cardano, Polygon, and Solana, three large altcoins, plummeted 30% on the week. That's all for this week. Please subscribe to the channel and help us promote it. Visit succinct.info to learn more about our subscription service. Have a good week.